G'day everybody. It's always a little bit tough on mornings like this when the market's made a sudden move, but this was always going to happen. When markets go up for so far for so long, there's a lot of profit on the table, and inevitably the first day down is always pretty sharp. Given what's going on at the moment, both technically and fundamentally, the fact that the ECB and the US Fed are basically made it clear that they're going to pump as much liquidity into the system as they can, I think this is going to be fairly short-lived. It's going to be just a normal kind of correction that you've got to have every now and again, and this is actually healthy. The unfortunate thing though is that smaller resource stocks tend to be the stocks that get belted the hardest. So again, that's pretty unavoidable. But I just thought I'd run through the key charts and just give you some thoughts on where the key levels will be and how this might play out. So we're looking here at the S&P on a daily chart. You can see that the RSI is well and truly rolled over now, and it really started doing so 2 days ago. So the levels that it's likely to find support at 1326, and then there is a level at around 1320 that I don't have shown here, and which is basically the 50-day moving average, and then 1294. So 1326 and 1294 would be the two areas to look for. Now, almost always, because it's just a reflection of crowd behavior, this will play out in three waves to the downside. The reason that occurs is there's an initial sell-off, then there's a bit of buying by the people who don't want the party to stop and think that this is just another buying opportunity. So inevitably in the next day or two there'll be a little bounce, and then the rest of the selling will take place, and that's where we'll find our bottom level. And that's always the way that it plays out, because that's just human nature. Now, looking at gold and silver. Now, gold obviously took a big hit, and just ignore this candle here three or 4 days ago. It's in error, so just ignore that one. So again, we've had one move down. I expect that we'll get a bit of a bounce in gold, and then we'll get another level down. I'm looking for 1658, which we got powerfully close to last night, and then the next level down is 1626. So they're the levels on gold. And if you look at silver, the same sort of thing applies. We've gone down, we've broken the first key retracement level, looking at 3176 as a possible level. Weren't too far off that last night. So I'd expect we'll get a bounce in silver and then another decline to 3176, and probably worst case scenario $30.45 or something of that nature. So I think that's how it's going to play out. As you've seen this morning, a lot of the small cap stocks have been hit pretty hard in an initial reaction. The better ones that have got some substance to them will come back pretty quickly. But I think over the next week or possibly 2 weeks that this takes to play out, there'll be some great opportunities. But I'd really encourage you to focus on the better quality stocks that have got some substance about them. So hope that helps. Cheers.